We've got three things to talk about today. I really want to show you this list of the actual performances of a lot of the stocks on the market. You're hearing that we went from correction territory into bear market territory. We're down 20% in some markets, more in some markets. And when you take a look at a lot of the stocks that are underneath the ones you hear about on the news, they've gone down a lot more than 20%. I'm going to show you some of these stocks today. We're also going to look at one thing that's going to show you that this mortgage demand decline is just getting more and more extreme. A lot of that in line with the recent interest rate increases, but we'll talk about that in this video. And lastly, people have been asking, I don't talk about it on camera anymore, but people have been asking about the boat that I'm going to be living on, that I'm working towards. So I'm going to give you guys an update because you're asking. Last time I talked about it, I lost about 1,000 subscribers in a day. So I got to be really careful there. It doesn't look that people take it the wrong way. I'll explain all of this in this video, and then I'm not going to talk about it much more ever again until I get the boat. This article is from CNBC, and it's just the same across all sorts of media saying the same thing. So this is just the one that I'm going to reference, but there's so much media coverage about this, and you guys see it probably in the real world too. Mortgage demand, housing prices, the amount of money you take when you're trying to sell your home. You'll be more likely to put up with more conditions. You might take lower than your asking price. There's not a lot of bidding wars anymore. This is all playing out right now, and you guys are on the cutting edge. You knew it was coming ahead of time, and now you're seeing. So this is from CNBC. Just a reflection of what's going on in the entire real estate market in the United States. It's the same in a lot of countries. It's even worse in the United Kingdom, and that's going to play out pretty soon in a bad way. So treat that like a precursor for what will happen here next. Total mortgage application volume fell 14.2% last week compared with the previous week, according to the Mortgage Bankers Association's seasonally adjusted index. Refinance volume, which is the most sensitive to weekly interest rate moves, dropped 18% for the week and was 80% lower than the same week 1 year ago. That sounds shocking and alarming, but that makes sense because 1 year ago, interest rates were incredibly low. And every time interest rates go higher, there's no benefit to refinancing your mortgage. You'll just have to pay more if you refinance it, so why would you do that? So you're seeing massive drop-offs, like you always do, in mortgage refinancing demand as interest rates increase. This is totally natural, happens all the time. Even to that degree, 86%. It's pretty significant. It's not based on everything I tell you. It's not based on actual weakness in the market, the real estate market. It's based on the interest rates. That's the only thing driving those levels lower. So 86% lower is okay. It's okay. Mortgage applications to purchase a home fell 13% for the week and were a steep 37% lower year over year. That's a more important one to watch. That's why this is a little bit more serious, a little bit more alarming. Actual applications to purchase a home fell 37% in a year. That is telling you that there's a softening demand for real estate. People aren't going to be paying as much to have a home. So that's just another step in what's happening, and there's a lot happening with the defaults I'm telling you are showing up, the bankruptcies. We'll get into that. I'll give you actual specifics, but there's big name companies you've heard about that have been under a lot of pressure, and a lot of companies have gone bankrupt or they're in the process of doing it. We'll do a focused spotlight on that whole concept for Peter Leeds Army members and everybody else too. Now this was meant to be at the last video we did at the end, just to pull it all together, but it got to be too long. I like to try and keep them shorter now, the videos. So this is what I wanted to point out to you. You're hearing a lot about these meme stocks like AMC, and then you hear that they've done so badly now. And you think it's just a one-off. And then you look at the index, and the index is only down 20, 30%. But then when you look at the individual stocks, let me just show you a few of these. GameStop we talked about, and that was a matter of time, kind of like AMC. It's going to come down at least this much. But you can see here, in the last 90 days, GameStop is down 78%. Here's a real estate company down 57%. AMC is down 42%. FedEx even though. And FedEx, like I told you, it's like Walmart and Other courier companies, it's a demonstration of a slowing economy. Less FedEx and delivery activity, and you have a slower consumer now. Things are slowing down across the board worldwide and in America, of course, as well. But there's a lot of names that you're going to recognize. CarMax. Here's a real estate company, Realty Trust, and this is just in the last 90 days. But if you look at 12 months, it gets a little worse, but actually not that worse. It's almost as if a lot of the decline accelerator happened more recently in the last 3 months. But if you look back 12 months, it's just a little bit worse. Virgin Galactic down almost 80%. Riot Blockchain down about 73%. Grayscale down 71.22%. Carnival Cruise Lines 70% down. Coinbase down 70%. And 22nd Century Group, that's a real estate group, down 68% on the year. That's free fall. That's extreme. Dude, you're getting Dell down 65%. Pitney Bowes down 64%. Under Armour declined on the 12-month period 63%. And it's not as if Under Armour is a really speculative company. You don't expect to lose that much money that quickly on a pretty solid company like Under Armour. And there's been some gainers too, of course, as always. But you'll notice that mining company, McEwen Mining, is up. Petroleum is up 112%. McEwen Mining was 266% on the year. TK Tankers, Devon Energy Group, Apache Corporation, Marathon Oil. A lot of these are commodities, and a lot of these are energy stocks that are performing so well. Marathon Petroleum's up 68% on the year. ConocoPhillips, Valero Energy Group up 55% on the year. I'm trying to demonstrate to you guys about the soft underbelly of this economy. This speaks to what's going to happen next. If you have a strong economy, you can generally get out of a lot of these fiscal conundrums, these financial concerns and these economic concerns. But the economy itself is the problem. It's not the main problem. The main problem is that people are making decisions for us, which results in the economy being in such bad shape when it doesn't need to be. We could have the strongest economy, no questions. Everybody have 2 TVs and a couple of cars and a nice house, and they can feed their family on one job. That's totally possible, totally doable. No one just realizes it. They don't think that we can have those days anymore. A few small changes would allow that, but I don't want to get into that in this video. I just want to show you guys that a lot of the things that drove people into the markets, all these AMC, GameStop, meme stocks, a lot of these reopening trades that are backfiring. There's been a lot of media coverage that then you'll watch it and you'll get one impression, but the actual impression that you should get is the reality. The reality is underneath there's numerous companies falling significantly, dramatically. And I know I showed you the list of the greatest decliners, but of course that's just to demonstrate for this video, but it just goes on from there. If you see a stock on this list, it's down. It goes on, the actual stock list of declining stocks goes down 5 more pages. Look at the stocks individually and you see how poorly they're performing. To see 80%, 85% declines widely is an insanely negative indicator. You've got pockets of weakness everywhere. Think of it like a house that's got termites and it's rotting, and you might not even notice. You might be like, wow, this is the greatest house. It's really well built, and you not realize the termites are just eating away the whole time. Then you lean on the wall and your hand goes right through it. This is what I'm talking about. This is where we're going. And so it's all about when that happens, what does the government do to react to it? They're going to overreact. And when they do, that's going to involve the only thing that they can ever do, which is create more money. And when they do that, they're going to come over the top with way too much money. It's going to either stoke inflation even more, or if that's not enough and then they come back in with an even bigger quantitative easing, then that's going to be the entrance or the beginnings of what I believe will be hyperinflation. But I don't think that will happen soon. There's a lot that's going to happen first. We need to have more pain, which is just ahead, And I'm sorry to be the wet blanket, but we need to have more pain, which is just ahead, before we move on to better days. And again, go back to the video, and I told you the 6 things that I did a few videos ago. The 6 things that have to happen before we turn into a new upward trend with lots of opportunity to make a bunch of money. Your investments will do really well after these 6 things happen. In my opinion, I truly believe these 6 things have to happen before we get out of this financial, whatever you want to call it. And now I'm going to talk to you guys about the boats. And I want to do this at the end of the video because last time I talked about this, and I take blame for that too, but last time I talked about it, I must have been over 1,000 YouTube subscribers in a day. And I realized, I went back and watched it, I get what I presented wrong. I am just excited about business. I love business, and it's the best business idea I've ever heard. And I'm doing it. And so that's where I'm at. It's expensive. It's going to take me a little while, but my plan is to give you guys an update because you asked, and I'm not going to talk about it again until I actually accomplish this. I'm going to get a solar-powered, sail-driven boat made by Silent Yachts. I'll get it used in the depths of the Depression for a way cheaper price, and I will live on it in the winters. That'll be it. So I'll go around. You guys can meet me. I'll come to you. How about that? I come to you. That's a good deal. But it won't hurt the environment. It doesn't require fuel. You have unlimited range. I can go anywhere in the world. That's the idea. It's going to be, even if you just look at it this way, the best promotional tool. It's like having a Red Bull van driving around town to town, only I'm going to do it worldwide. That's the plan, and I'm working towards it every day. So don't think I forgot. I went from a time back in the old days, which were like not that long ago, but I always tried to accomplish something before I talked about it. That I flipped recently in life, last couple of years, where it's like I'll talk about something because it motivates me to get to it, especially if I talk about it on camera. If I tell you guys I'm going to do this and I don't do it, how does that look? I love delivering on a promise I gave you, and this will be a promise I said years ago that I worked towards, I accomplished, I manifested it, I created it, and then I live on a boat. And you guys come and visit me when I'm in town. But be patient. Don't think I forgot. I'm working towards it every day. Right on, guys. I don't want to talk about it again. Thank you so much. I love you. And thanks so much to everybody in the Peter Leeds Army. Hey, if you haven't figured out where that is, go to peterleeds.com/army. And your support will really drive everything we do. We're able to get more videos now, more quality content, more in-depth research because of people who have joined the Peter Leeds Army.